Hi, it's Luke. When most of us think about F45, we tend to focus on the workout system, and for good reason. It's dynamic, it's fun, and it delivers incredible results. But F45 is so much more than just a workout. It's a really remarkable business system that is inexpensive to set up, it's easy to operate, and it's highly profitable. And this is the reason why we're now the fastest growing fitness network in the world. As you're evaluating a possible investment in an F45 franchise, it's essential that you develop a solid grasp of the financial aspects of our business model. For those of us who aren't financially inclined or used to spreadsheet analysis, this will seem a little dry, but it's imperative that you get your head around the business model and that you have a good idea what the opportunity looks like in your local target market. To help you get clear on both points, I've built a tool called the F45 Economic Discovery Model, which you can use to educate yourself about the investment case and crunch the essential numbers that you'll need to know. In this clip, I'll walk you through how to use the tool, and I'll also explain how you can interpret the results. Before we get started, I should point out that this tool is developed in Microsoft Excel. If you don't have this application installed on your device, you'll need to either buy the program or switch to a computer that does have Excel installed. Okay, so here we have the F45 Economic Discovery Model. The version that you're looking at might differ slightly to this version, but I wouldn't imagine it would differ greatly. I'll just give a very quick overview of the model and then we'll go into an example of how I'll use it to project the performance of a studio. As you can see here, there are three tabs. One is called Discovery, the second is called Chart, the third is Financials. This first tab is divided into two sections. We've got the section here on the left, which is a questionnaire. What I'm asking here is for the values of 31 inputs, and based on the answers that we put in, the values that we put in, the model is going to make calculations and then projections. I've set it up this way because this model can actually be used anywhere in the world. It could be used in Australia, it could be used in China, it could be used in the Middle East. And the formulae will hold, but the values that we're putting into these cells might differ. So for instance, the currency is going to differ according to where you are. The member price might differ from market to market. I would expect rent to change significantly as we move around the world. So the benefit of this model is that we can use it in any market scenario. You don't have to take the numbers that I give you as given. You can actually adapt it and test for different scenarios. You might even be looking at two different real estate opportunities in your market, and the rent on one is very different to the rent on another. But you might be of the view that the price of the training is also going to need to change. And so this model will allow you to test for those different scenarios. This table on the right-hand side will then summarize the key statistics. So it will give you a very quick overview of what the opportunity looks like. And then these tabs, in particular the financials tab, gets a lot more detailed. It looks pretty scary, but I'll walk you through it and you'll understand how to interpret these numbers. So let's go ahead now and crunch some numbers on a hypothetical example. So question one is, which territory and which country are you considering? Let's assume that we are considering a central London opportunity in the UK. We'll just enter that there. The currency in the UK is the Great British Pound. Do we intend to be an owner-operator or an investor in the business? I'm going to assume that we will be an investor. This is relevant because the staffing requirements of the business, if it's owned by an investor, will be slightly different to if it's owned by an owner-operator, that is somebody who's working in the business. The monthly membership cost is going to be £240 per month. This is inclusive of sales tax. I'm going to strip that out later on. I'll strip out the sales tax, but for the moment, I'm just putting in the membership price that I'm assuming. Is there a sales tax in this country? Yes, there is. The sales tax happens to be 20%. The rent that I'm looking at, the gross rent, that is rent exclusive of sales tax, is £80,000 per annum.
Let's assume that the landlord is willing to give us 6 months rent-free period on the lease. Let's assume that there is a 3% anniversary rent rise, so every year the rent goes up by 3%, which may or may not be the case in your scenario, but most leases will have some sort of anniversary, some sort of yearly increase in the rent. It might be a fixed percentage, it might be tied to the CPI, the Consumer Price Index, but this model will account for that. Business rates is essentially a levy that the government might put on a business for operating. It's not common in my experience, but there are certain economies out there where the government does impose a tax on businesses, and that tax pays for, garbage collection, it pays for roads, it pays for other infrastructure. In the UK, there is actually a business rates, and I'm going to assume that it's 20%. It does vary, but I'm going to assume it's 20%. Actually, no, I think in Westminster it's probably more like 30, so let's assume it's 30%. How many F45 classes per day do we plan to run? Let's assume 6 for the time being. Do we require a full-time trainer manager to oversee the business? I'm going to say yes, because I'm an investor, so I'm not working in the business day to day, so I do require a full-time trainer manager to work in the business. The salary will be, let's assume, £30,000. Then I am adding a buffer. I'm actually adding 20% for benefits, that is holidays and perhaps sick leave or pension contribution. How much do you expect to pay your casual training staff per class? Let's presume £25 per class. So the casual training staff, these are staff who are not necessarily employed full-time, but they might come in and do the morning sessions or the evening sessions, and they'll be paid, typically paid per hour or per class. The next 3 cells relate to the fees of F45. So the 3 key fees is the upfront franchise fee. In the UK, it happens to be £35,000. The monthly franchise fee is £2,000, and the equipment pack is £65,000. Construction costs, I'm going to assume that construction is going to cost me about £80,000. The rental deposit is going to be worth 3 months' rent. How much do you expect to pay for legal fees? Let's assume £2,000. Legal fees would be for reviewing the franchise agreement and reviewing the lease. Membership at inception, I'm going to assume 30 members at inception. That's 30 pre-sold memberships, and I'm going to assume growth of about 30 members per month. I'm going to assume a pre-open marketing budget, that is the funds available to spend on marketing before I open, of £10,000. The monthly marketing budget, I'm going to put at £1,000. Cleaning expense, let's say £300. Phone and internet will be about £150. Monthly insurance expense, about £250. The rest of these are just relatively small ticket items, but I'm putting them in there just for the sake of completeness. Water and electricity, about £400. Okay, so I've completed the questionnaire, and you can probably see as I was filling out those values, these cells were starting to populate with numbers, and then they were starting to change. So you can see that the cells are calculating, they're crunching numbers based on what I'm putting in here. And so what this table is doing again is it's summarizing the opportunity. It's just taking the key headline numbers and making them very apparent, so you can just quickly get a sense of how sensitive the model is to certain input parameters. So what are these numbers telling us? The first cell relates to the estimated average total monthly operating expense. So what this means is how much money is the business going to cost me to run each month? And the answer is £22,000. So this is taking into account things like rent, wages, license fees, franchise fees, marketing budget, and so forth. So this business is going to cost us about £22,000 per month to run. The total amount of money required to open the business is estimated to be about £215,000. So this is the amount of money that we need to know that we have available to set the business up before we get going. The break-even membership number is estimated at 113 members. What that means is how many members at this assumed price do I need to cover my costs? So this number will tell you how many members you need for the business to break even, for the business not to cost you money. This is the first goal in terms of membership, is to get to this number as quickly as possible so that the business doesn't burn a hole in your pocket. Then I'm just summarizing profit at key member milestones. So this is monthly profit, notional monthly pre-tax income at 100 members. And then this is the annualized, this is the annual profit at 100 members. So essentially I'm just multiplying this value by 12 to get this value. So you can see here that at 100 members, the business is marginally negative each month. I'm losing nearly £3,000 per month, or £30,000 in a year. And we intuitively know this because we know that our break-even member number is 113 members. So at 100 members, we know that we will be losing a bit of money. But then at 150 members, we are cash flow positive because 150 is greater than 113. And you can see that the business is projected to make about £7,000 a month, or £84,000 a year, which, is not bad. Then it starts to get interesting though at 250 and 300 members. And at those member milestones, the business is making £26,000 a month, or £315,000 a year. And then at 300 members, you're really creaming at £36,000, or 430 grand a year. Of course, there's more detail and more data that we can get into, and I'll get to the financials tab in a second. But if you're playing around with the model and you're testing for different parameters, so let's change the rent to £100,000 per annum. Let's just have a look at what that does to our break-even member number. It increases the break-even member number. So a bigger rent is going to put more pressure on the business, and we need more members to sustain it. If we come across a rental opportunity where it's only going to cost us $50,000 a year, we can see that drops our break-even member number to 96 members. So the business is going to become more profitable with a lower rent, which makes sense intuitively. So this is hopefully a really useful tool for you as you're going through and evaluating the opportunity in your local area. You can change all of these parameters. You can change the member price to £150 a month. You can change the number of classes a day that you run to 10. That's going to actually have an effect on wages, and it'll make it less profitable in the short term. So yeah, you can test for all these different scenarios, and the tool will give you a reliable estimate of profitability. If we turn to these tabs here, chart, this is a visual representation of the first 18 months of performance, of monthly performance. And so on the horizontal axis, we have time measured in months. On the vertical axis, we have profit. That is not revenue, it's profit. So time zero is obviously when we opened. In the first month, we're marginally negative because we are presumed to be starting with only 30 members. Remember here, we were able to plug in membership at inception. And so we lose a bit of money in that first month. But assuming our member numbers grow at a rate of 30 per month, then in the second month we will make money, and we'll continue to make money as long as the member numbers grow. It is the case that our business model will have some limit to the number of members. That number is going to depend on a couple of factors, in particular how many members you can fit in a class and how many classes you can fill up in a day. As a general rule of thumb, I would regard capacity at somewhere between 300 and 350 members in most cases. So for those who aren't numerically inclined, by plugging in these values, you can get a quick and easy overview of how profitable a business is going to be. You'll notice that the profit numbers spike every 3 months. So we've got the first spike here, second spike here, third spike here, fourth spike. This relates to the effect of the F45 challenge. The F45 challenge is a nutrition program that we run in conjunction with the training. It's an 8-week program, and we run it every 3 months. So every 12 weeks, there's one 8-week challenge that's run. The challenge is a very, very effective tool for promoting body transformation, in particular fat loss, but it's also a really potent tool for franchisees to grow their business, because of its marketing power. The F45 Challenge is typically promoted online. It's people who are not members of F45 Studios are invited to come in and sign up for the challenge for a limited period. They will pay an upfront fee to do so. And so that's what explains these spikes in revenue. Every 3 months, there should be a fairly significant sum of revenue generated by selling challenge memberships to non-members. The other nice thing about the challenge is it has a knock-on effect because people who participate in the challenge are probably going to be more prone to signing up for the longer-term membership as a result. So franchisees should really get behind the challenge and understand how powerful it is. They should plan for it well in advance and see it as a very potent opportunity to generate significant revenue every quarter. On the right-hand side, you'll see another scale, and this scale is actually off. When you compare it to what you see on the left, you'll see that it's a different scale. This relates to the lines, the blue line and the green line. The blue line is the monthly profit annualized. So I'm taking the profit that's earned in a month and I'm multiplying it by 12. But obviously this isn't 12 times higher when compared to this axis. So we need to compare it to this axis. So we'll see here that in month 2 we're projected to make £18,000 in that month. That relates to this axis. In a year, it's roughly £200,000 a year. So you can see here that whilst the business is in its infancy, it is growing quite quickly, and on an annualized basis, you can see how much profit in a year at this rate of profit generation, how much profit I'm going to make in the next 12 months at that rate. The green line is the cumulative gross operating profit. So this essentially adds the profit and the losses monthly to give you a running total of how much the business owes you or how much the business has made since the first initial investment that was made. So you'll see here that actually when we compare it to the right-hand axis, when we are negative. And what that's saying is at day 0, the business owes us money because we have had to spend money on things like franchise fees, construction, equipment. We know that the total outlay is about £215,000. And when we compare that to this tab, we see here that, yeah, it's marginally lower than £200,000 out. But what it allows us to do is it tracks profit over time. So as the business becomes more profitable, and we see that it's becoming more profitable here because we're generating money, positive income, you'll see that this line is actually increasing and it crosses 0 at about month 13. So this model has what we call a 13-month payback period. So the initial £215,000 that we had to spend to open the doors is projected to be returned by the business at around month 13. So switching to the financials tab, this gives us a lot more detail around these calculations. It's divided into about 6 parts. This section restates the key assumptions that we're making around rent, membership pricing, wages, and so forth. And that's really just for easy reference. So as you're kind of scrutinizing all of these numbers in detail, if you forget what your member price is, you can just look up here and say, okay, that's right, I'm assuming a member price of £240 per month. This section breaks down the initial investment. You might recall that we calculated that we need about £216,000 to open the business. So this is detailing what makes up that figure. So we've got the franchise fee, equipment, construction costs, rent, marketing, and so forth. Now you will notice there's a difference between the £216,000 and the £212,000 that we calculate here. And this difference is actually made up by this loss. So what I've done is I've actually added up all of the losses that I'm expected to incur, and I'm adding that to my initial outlay because what I need to know is how much cash do I need in the bank to open up this business and get it to break even. You'll see this effect more clearly if let's say if we drop the member price and make this business less profitable. You'll see that if I've got a lower member price, I'm going to lose more money in those first couple of months. So my required outlay goes from £215,000 to £224,000. And again, that difference is explained by these losses that I'm incurring. So I'm adding up these losses to this figure to give me the total amount of money that I need to get the business open and fund it during those first few months to break even. Then here, this section just details the revenues. The business is presumed to generate revenue through two means. First is just the regular membership sales. And you can see here, my membership revenue is just an easy multiplication of the number of members that I've got at any one point in time, multiplied by the average member value. Then I've also got income attributed to the challenge. And you'll see here that most months I don't earn any income, but once every 3 months, I'm going to earn income by selling challenge member packs. And of course, that's going to really boost my revenue. So again, the message is you should get behind the challenge from day one. Don't view it as a chore that you only need to regard at sort of month 6. You should be getting behind this as soon as possible because it will make a very big difference to the performance of the business in any given year. Of course, there are other opportunities to generate revenue through merchandise sales and things like that, but I'm just assuming that we're going to generate revenue through membership sales and the sale of challenge packs for the time being. Then we've got the expenses. These are the costs that the business is going to incur. So the big ones, obviously rent and wages, they're in there. We're in the UK where they're a business rate, so I've accounted for that. We've got our franchise fee, which kicks in at month 4 typically. Energy and water, utilities, internet, software, so on and so forth. This all sums up to give us our monthly cost. That is how much money the business is going to cost to stay in business. And again, if you compare it to what we saw here, the estimated average total monthly operating expense, I had about £22,000 a month. And you can see here in these first few months, the business isn't that expensive. That's because we've got this nice rent-free period. Once rent kicks in, then it jumps up to it's £23,000 a month. So I'm taking an average and I get about £22,000 a month. Of course, once we hit our magic break-even number in terms of members, which we calculate at 113, then the business becomes profitable. So 113 members is required to generate the revenue that will cover our costs. Every member beyond that is going to grow profit. And so we'll see here what effect this has. This is the last section where I summarize a couple of profit measures. Gross operating profit. This is just monthly revenues minus expenses. We start out at negative. We lose a little bit of money in the first month, but then we start to make money from month 2. And again, this is helped by the fact that we're in our rent-free period. The next line here is the annualized gross operating profit. So that is how much money we're making over the course of a year at this particular run rate. So if we were to, let's go out to month 6. Month 6, we're assumed to make £24,000 in profit. On an annualized basis, that is £286,000. So at this rate of profit generation, we're going to make this much money, £286,000 in a year. Lastly, the cumulative gross operating profit. This is the term that we learned when I was looking at this chart, and I pointed out the green line is our cumulative gross operating profit. This accounts for the money that we've spent to get the doors open, so that's the £214,000, and then it's adding the monthly profit or the monthly loss to that number to give us the cumulative gross operating profit. So we know that this is how much money the business owes us on day 0, and then in month 12, we can see that in that first 12 months, the business has nearly paid itself off. It's nearly earned back all the profit required to fund the business in that early stage. So that may or may not be a useful stat. I find it useful because it tells me the payback period under the certain assumptions. So I know that when that number becomes positive or when it hits 0, that the investment has paid itself off. And then I can have a look at and see, all right, how long did it take? In this case, it seems to have taken, roughly 12 months, maybe a little bit over 12 months. But I can know then that at £240 per month membership price on 80 grand a year in rent, my payback period is going to be about a year.
So that's the F45 Economic Discovery Model explained. If you'd like to receive a copy, please drop me an email at the address below. and state the country that you're considering developing. Once you've completed your financial analysis, please feel free to send me your results and I'll be happy to share my thoughts. As always, thanks for watching and I look forward to speaking to you again soon.